Hey everyone, and welcome back to the channel.
Today, we're tackling the question that's on everyone's mind in the crypto space. Can Bitcoin really hit $200,000 by 2025? It's a bold Bitcoin price prediction, and the excitement is palpable, but in this video, we're going beyond the hype to conduct a crucial Bitcoin 2025 reality check. We're going to dive deep into the factors that could propel Bitcoin to such heights, but also the significant hurdles and macroeconomic headwinds that could stand in its way. This isn't about blind speculation, it's about informed analysis. So, let's get started. First, let's explore the bullish arguments. Why are so many analysts and institutions setting such ambitious targets for Bitcoin in 2025? 1. Institutional adoption. This is perhaps the biggest driver. We've seen a dramatic increase in institutional interest, particularly with the approval of Spot Bitcoin ETFs in early 2024. These ETFs have opened the floodgates for traditional investors, pension funds, hedge funds, wealth managers, to gain exposure to Bitcoin without directly holding the asset. Firms like BlackRock and Fidelity have seen substantial inflows, and this trend is expected to continue. We're talking about billions, potentially hundreds of billions, of dollars flowing into the market. Citigroup, for example, is forecasting a bullish scenario of $199,000 by the end of 2025, largely driven by these ETF inflows, estimating that every $1 of ETF inflow could add $4 to Bitcoin's price. 2. The halving cycle. Bitcoin's inherent scarcity mechanism, the halving, which recently occurred in April 2024, is another key factor. Historically, Bitcoin's price has seen significant pumps in the 12-18 months after a halving event, as the supply of new Bitcoin entering the market is cut in half. This creates a supply shock, and if demand remains strong or increases, prices tend to rise. While past performance is not indicative of future results, the pattern is undeniable and a major part of the bullish thesis. Point 3. Growing user base and utility. Beyond institutional money, retail adoption continues to grow. More people are becoming aware of Bitcoin, not just as a speculative asset, but as a potential hedge against inflation and a store of value, digital gold, as some call it. Layer 2 solutions like the Lightning Network are also improving Bitcoin's scalability and utility, making it more practical for everyday transactions. Citi also suggests that a 20% increase in active Bitcoin users could contribute a significant portion to its price rise. Now, for the crucial reality check. While the bullish arguments are compelling, it's vital to acknowledge the significant headwinds and risks that could prevent Bitcoin from reaching $200,000.10. Macroeconomic factors. The global economic environment plays a massive role. High inflation, rising interest rates, and geopolitical instability can all lead investors to pull out of riskier assets like crypto and seek safety in traditional investments. We saw this in early 2025, where despite initial optimism, macroeconomic uncertainties led to Bitcoin pullbacks. If central banks maintain a tighter monetary policy, it could dampen liquidity flow into cryptocurrencies. 2. Regulatory uncertainty. While there's been progress, the regulatory landscape for cryptocurrencies is still evolving globally. Restrictive policies, outright bans in key markets, or even a lack of clear frameworks could stifle adoption and innovation. While the current US administration under President Trump has adopted a more crypto-friendly stance, political shifts can always introduce uncertainty. 3. Market volatility and black swan events. Bitcoin is inherently volatile. Sudden price swings, large sell-offs by whales, large holders, or even security breaches at exchanges can trigger rapid corrections. The February 2025 market downturn, for example, was influenced by macroeconomic factors and security incidents. There's always the risk of unforeseen, black swan, events that could derail even the strongest predictions. So, how do we gauge Bitcoin's true potential and navigate this complex market? It comes down to monitoring key metrics and understanding varied expert opinions. Point 1. On-chain metrics. These are invaluable. We're talking about data directly from the Bitcoin blockchain. MVRV, market value to realized value. This helps us determine if Bitcoin is overvalued or undervalued. When MVRV is high, it often signals a potential top. Asterisk exchange inflows, outflows. A significant increase in Bitcoin flowing onto exchanges can indicate selling pressure, while outflows suggest accumulation. SOPR, spent output profit ratio. This tells us if investors are selling at a profit or a loss, giving us insights into market sentiment. Asterisk active addresses and transaction volume. These indicate network usage and growing interest. 2. Expert analysis and consensus. It's crucial to look beyond single predictions. While some, like Standard Chartered, have reiterated a $200,000 target for end 2025, others like Changelly and Trading Economics offer more conservative estimates ranging from $105,000 to $129,000. Citi's base case is around $135,000. The key is to understand the reasoning behind these predictions. Are they heavily reliant on institutional flows, or do they factor in potential market slowdowns? Diversifying your information sources is critical. After weighing the bull and bear cases, and examining the data, let's get to the core question: is Bitcoin at $200,000 by 2025 a realistic possibility? It's certainly possible, especially if institutional adoption continues at an accelerated pace, fueled by robust ETF inflows, and if the macroeconomic environment provides tailwinds rather than headwinds. The post-halving cycle has historically been very strong. However, a more pragmatic and balanced outlook suggests that while significant growth is highly probable, hitting a clean $200,000 is on the higher end of realistic expectations. A range between $130,000 and $170,000 by year-end 2025 seems a more widely accepted and statistically supported forecast based on current trends and expert consensus, assuming no major negative black swan events. Remember, the crypto market is dynamic. While the underlying fundamentals of Bitcoin remain strong, its scarcity, decentralization, and growing network effect, external factors play a crucial role. Don't chase speculative pumps. Do your own research, understand the risks, and consider dollar cost averaging to mitigate volatility. We hope this reality check on Bitcoin's $200,000 prediction was insightful. What are your predictions for Bitcoin in 2025? Let us know in the comments below. If you found this video helpful, please give it a like, subscribe to our channel for more in-depth crypto analysis, and hit that notification bell so you don't miss our next upload. Thanks for watching, and we'll see you next time.